Hi, my name is Michael Gilmore, and I'm the writer of WhizBang's blog and also one of the co-founders of ParkLogic.com. And it's great to have you here with today to hear the impact of the COVID-19 virus and what's actually going on with the impact of COVID-19 on PPC rates for those of you that are monetizing your traffic for your domains. Now, I must admit, this is the week I've really been hanging out for. And although we'll get some disruptions from Easter coming up across this weekend and next week a little bit, this first glimpse of data is absolutely critical if you're monetizing your domains. And the reason why I say that is that the first 3 months of the year would have been on the first 3 months, first quarter's advertising budgets. And so we could have seen that upswing was because in revenue that I've gone through like across the last 3 videos on the COVID-19 virus is due to the advertising budgets finally expanding themselves out. But now we have a new quarter's advertising budgets coming into play here. And what I was worried about was there was going to be quite a sharp downturn. So let's take a look of what's going on with the real numbers and the charts we've been looking at, particularly the last few weeks, because these are the things which actually are going to make it or break it for some domain investors, what happens with these numbers. So just bear with me for a second, and I will just switch across to the system. All right then. Okay, so COVID-19 impact week 4. And this is what we've been waiting for, as I just mentioned. So what's actually happening with the normalized RPM? The normalized RPM and also the RPM trends at an aggregate level, what's going on with those? We can see at an aggregate level, they're still maintained. Now, remember, focus your eyes on that last little piece just there, which is highlighted on your screens. That's the latest week, and looking at towards just the beginning of April. Once again, it's only early days, this data, but you can see there the RPM is sort of flattened off a little bit there. In fact, it's gone down a little bit, but it hasn't collapsed. And the thing I was interested in reading back on some news articles is that Facebook and Google were putting out profit warnings and everything like just about every other company. I think here in Australia, out of the top 200 companies, something like 180 of them issued profit warnings due to the COVID-19 virus. And so Facebook and Google in the US did exactly the same sort of thing, but we're not seeing that happening. We're actually not seeing that happening in the numbers, which is quite surprising. So if you've got Google and Facebook shares, maybe well done for holding on to them, because you could be in for quite a great ride coming up, because we're not seeing it all collapse down. And as I mentioned last time in week 3's video, is that I wonder if this is because a lot of those small businesses which have had brick and mortar shops and that sort of stuff have now been forced to close. And because they're closed, they're now sort of saying, well, what do we do? Like, we've got to earn some sort of livelihood. And that's one of the things they're thinking about, is how do we earn some money here? And so the only option for them was to go online. And so they've now come online and in droves, and that's keeping the EPC rates up, even though the more quotation marks professional online marketers have actually exited. I think I saw an article that Amazon had frozen all online ad spending. And you've had a whole lot of major companies like that. But what's occurred is there's this huge deluge, I think, of small businesses are coming online. And with them coming online, they're wanting to buy traffic and try to work this whole thing out. And I wouldn't be surprised if some of them are sort of lashing out to try to get any customers they can to be able to liquidate some of their stock and that sort of stuff. So there could be some really good deals online right now. But that's a guess. What I'd be very interested to see is what's happening with Wix and some of those other companies out there that have sort of turnkey solutions for small businesses to get online, and where they're seeing a surge upwards, and what's happening to WordPress and some of those content management systems, Joomla and so forth like that. Um, and whether they're seeing a surge of activity as as the small businesses do come online. But there's definitely been the numbers look like they're holding up at this stage at an aggregate level. But let's drill down to the next levels here. So here we go. EPC. And we can see that EPC has gone down, and you can see that just there. And the EPC is the red line. It definitely has taken a step down, but I think that's been offset on the revenue numbers by the increase in traffic. So there's been more traffic, a little bit of a lower EPC coming into April, but it really hasn't fallen down to the lows of mid-February. Like, it came up quite a ways since then. So I don't know whether that's an impact of the new budgets, or if it's just dropping down, or whether we're running into Easter. There's a lot of things that I think will have 2020 vision in hindsight, with a lot of that. But CTR bounced back up again, and we can see CTR is looking pretty healthy compared to the trend across time. All right. So volatility. What's going on with volatility? Remember, with the volatility index, anything above 1 means it is essentially more volatile, of comparing like a Monday versus the previous Monday, a Tuesday versus the previous Tuesday. So it means it's jumped or spiked. Anything below the 1 point is there's a contraction. So you can see just there that basically everything is just maintaining. So it's not like the overall revenue isn't suddenly fluctuating or going up and everything, but it's just maintaining around that one line. If there's a slight contraction at all, but I really don't think there is. So that's the volatility index. So let's take a look now at the revenue split, Google versus direct advertisers. Google versus direct advertisers is fascinating. There's becoming slowly a wider split between the Google-backed companies and the direct advertisers. Be interested to see whether that pulls back again. And we can see there that the last data point, I think, is just about 35% is for direct advertisers versus Google. It was at 65%. Now, I should say something about the Google-backed companies. Some of the numbers inside the Google-backed companies could also come from direct advertisers, like if the traffic went to a tier 2 source because it's blocked by Google. But it gives you the overall trends, and I think that's good enough for now. So next, now this is an interesting chart. This is the normalized RPM for Google and also for direct advertisers. I know that the heading says normalized RPM and RPM, but it's actually just the normalized RPM. And you can see that the direct advertisers have just collapsed, have fallen right off initially, and then bounced back again. So it fell, then bounced back. And on the normalized RPM. Now, what we don't know is whether that's going to springboard further and continue on and upwards again. But Google definitely has progressed upwards. That is clear. They're paying more for traffic, which means if it's a true auction system, as they say it is, then that means there's more people bidding for the traffic, and they want to get that traffic. So that trend is definitely in place, and it's maintained, which is incredible. Good news for all those people in the domain industry that are into the traffic monetization. I actually think that the direct advertisers will also bounce back as well. But we just need to get through this Easter period. I think having a holiday right now just tends to disrupt things a little bit. Okay, so what's happening with Google versus direct advertisers? Once again, at around the 100% mark, anything above 100%, there's an expansion. Below 100% is a contraction. And so you can see just there that Google's basically maintained. There's been quite a contraction by the direct advertisers. They tend to be volatile, as we can see, around the but mid-March, you can see there was a downturn. So we'll see if it kicks back up again. But yeah, so I think the chart to look at is the overall one, as we saw before. This one right here. And the fact is, the future is looking pretty good, as my last slide says, which is the future is looking very good, and the future's and we should be pretty happy about that. I'm pleasantly surprised, and starting to become even optimistic that the numbers are going to be maintained for quite some time. And this means for all of you that have been riding that upward wave in online demand and so forth with your traffic, then I think that you'll be looking at the numbers and saying, "Oh, please, may they continue." I think they are for some time now. Once again, it'll be 2020 vision in hindsight, but there's one thing for sure: it's not what I expected. I thought the numbers would likely collapse, but that hasn't happened. So I just wonder what's going to occur. You've got this influx of obviously new blood into the online space in terms of the small businesses. What's going to happen when the large businesses and the corporates turn their advertising budgets back on? And I think that soon as the large corporates turn their advertising budgets back on, I think it's going to become really interesting. This whole space is so dynamic at the moment, and I wonder whether we're going to see a surge throughout the rest of the year, and then we'll run into Christmas. And then what will happen, I think, post-COVID, say in 6 months' time, is this going to maintain going forward? Because there's one thing for sure, the world has changed because of this issue, because of the virus. And everyone's being pushed online because of the social distancing laws and so forth like that. And I think that's going to continue on. It's one of those bellwether moments like 9/11 was, where people will look back at this event and say the world changed at that time. And that's the thing I think will occur. And if you're in the domain space, that's only good news. For those of you who are selling domains, I'm not sure how the industry is going on the sales side. It would be interesting to see some of the numbers as they come out, as they're released. But on the monetization side, we're seeing it's positive, and that's great news. Anyway, thanks a lot for that. I hope you enjoyed this video and this series and of what's actually occurring at each step with COVID-19. And don't forget to subscribe and like the video. Anyway, thanks a lot for that. Bye. Hi, I hope you enjoyed that video and that you find this information that I'm providing through my blog and through these videos really interesting. Don't forget, subscribe, whatever you subscribe, so you don't miss out on the next installment I'm going to be releasing. Or you can click on the push alerts on the website. So either two, but anyway, thanks a lot. Bye.